So Empowa works with local developers to provide rent to own, where a tenant pays a minimum rent each month, and then over the course of an agreed period, contributes ad hoc to paying back the capital of the home as and when they have access to funding. So that rent to own is not a new concept, but bringing it into affordable housing across Africa is relatively innovative. Where we really innovate is how we've used blockchain to improve transparency in that space, to improve efficiencies in that space, and really to try and leverage some of this new tech to unlock this opportunity.
What's up, Ada Nation? Welcome to Dapp Central, your home for everything blockchain and crypto. I'm your host here, Furi. As a part of today's video, we're taking a look at a project with a real-world impact that is Empowa. As a part of this sit-down, I'm going to be joined by Greg, their head of operations, to get a full understanding as to, number one, what this project is building, and then number two, all the different parts of their growing ecosystem. Without any further ado, let me go ahead and bring up the man himself. Greg, welcome aboard. How are you?
Hey, yeah, thanks for having me on the show. And it's an exciting day to be here because earlier this morning we announced our launch in Kenya. So your timing couldn't have been better. We've got some obviously exciting updates to share.
Yeah, I'm excited to have you on. Empowa's been on my radar for quite a bit of time. It is a little bit more complex. You guys have a really interesting mission, and I think this interview is well overdue. So we're going to dive into a little bit of your background, your experience, your qualifications, but then I just want to get a better understanding of the entire Empowa ecosystem, and then maybe we can close off here with a little bit of the discussion surrounding what you just mentioned, which is your launch in Kenya. Could you maybe just kind of kick us off here with a little bit of your background, how you came into this space, and then we'll talk a little bit more about Empowa.
Absolutely. So I'm originally from South Africa, grew up there, and I'm now based in the Netherlands, moved here about 3 years ago. But whilst I was in South Africa, I had started and was running a business focused on providing affordable access to student funding. That's like in America, a big challenge in South Africa. And our mission was to try and give interest-free student loans. I decided around the time of COVID that I was interested in moving abroad, just, having a different set of experiences, and got into contact with Glenn, who at the time was working on how could we deliver affordable housing, with, again, better financing, making that possible. So it really interested me, this idea of being able to get improved access to finances and unlocking not only the impact that can make, but the business opportunity it presents. And I had been dabbling in the world of blockchain since, I don't know, maybe 2013, 2014, but doing all the usual, early stage kind of involvement in blockchain, buying a few tokens, losing some money, buying some other tokens, making some money. I think that's a shared experience with everyone who first gets into blockchain. And when I heard that Glenn was looking to leverage Cardano to deliver this, I was really excited to be able to work on something that was using blockchain not only for trading and profit, but actually for a real world use case. It's a combination of it appealing both to an industry that I was interested in, kind of better costs of capital to unlock social impact and create business opportunities, and leveraging blockchain for real world use case. I was really interested in, so dived into the Empowa team and was there from just after the white paper was written. So I would say part of the founding team and have taken us from that moment to where we are today.
Thank you for the introduction. I know you guys have been building diligently for quite a bit of time. Really interesting story about how you came into the space and how you've been able to sort of endure the bear market. And I think you guys are now on the up and up, as you just mentioned earlier, not just with your seeds already planted in Mozambique, but now also moving over and expanding into Kenya. Now, let's maybe just jump into Empowa. Could you, for anybody who's hearing about this for the first time, explain the goal, the mission, and just where the motivation has come for a project like this?
Yeah, so, if one looks at housing and especially affordable housing across the African continent and in many emerging markets, but particularly in Africa, there's estimated to be a backlog of around 50 million homes. And the reason why there is such a backlog is in many markets, there's no functioning home loan or mortgage market. If you take Mozambique, for example, there's 31 million people who live in Mozambique. And before we entered the market, there were only 600 home loans. In Kenya, Africa's third largest economy, a powerhouse of East Africa, there's 55 million people, but only 27,000 home loans. So these are really ridiculous numbers when you consider the scale of the country. And the reason why there are so few home loans is across the continent, on average, about 80% of income is informal. Now, your traditional mortgage assumes formal income. It says, I'm going to loan you some money, and each month you're going to pay back a set amount for 10, 20, 30 years. But if your income is informal, it's erratic, and therefore the traditional mortgage isn't a good financial instrument, and therefore you won't qualify, and you're left to either have to try self-build your home or save up to buy it in cash, and both have very negative consequences. So we identified this as a real business opportunity, with a growing young continent so underserviced. We realized that if we can provide something that's akin to a home loan or akin to a mortgage, but is more suited, then we can have real impact and unlock a real business opportunity. So Empowa works with local developers to provide rent to own, where a tenant pays a minimum rent each month, and then over the course of an agreed period, contributes ad hoc to paying back the capital of the home as and when they have access to funding, which could be around harvest season or tourism, or maybe they're a gig worker. So as a result, their income is more erratic. So that rent to own is not a new concept, but bringing it into affordable housing across Africa is relatively innovative. Where we really innovate is how we've used blockchain to improve transparency in that space, to improve efficiencies in that space, and really to try and leverage some of this new tech to unlock this opportunity. Maybe it's something I can get into now, or maybe it's worth getting into at a later stage.
Yeah, I was really surprised to hear about those numbers and how difficult it is for people in those countries, right, which are continuing to develop, to get what is somewhat standard here in countries, for example, like the US. In Europe, I know that the housing markets are extremely hot right now and homes are going for sale, relatively quickly. Whereas, as you mentioned, in those countries where there's millions of people and barely any loans, right? Those are minuscule numbers compared to the population that lives there. Interesting mission and interesting use case here for Cardano. Now, you guys have an ecosystem which is made up of a couple of parts, and you've talked about, this rent to own model. I know that there is a crypto community that's able to contribute to this, right? But then there's also institutional investors. So I'm going to quickly pull up here the Empowa ecosystem. And what I'd like to do is just take a couple of minutes here to just kind of dive into this a little bit further. Number one, focusing on the investments. Number two, the online community. Number three, the loans and the service providers. And then number four, the clients. So could you maybe kick us off here with just the accredited investors and what their role is when it comes to the Empowa ecosystem or the Empowa economy?
Absolutely. So our funding for the rent-to-own contract. So maybe it's important just to differentiate. We do not finance construction. We do not finance building homes. We partner with local developers to allow them to provide rent-to-own to tenants on the ground. So we will find a local partner who has a completed set of developments, who's struggling potentially to sell those because the tenant on the ground isn't able to get a mortgage or pay for it in cash, and we work with them to sell that via rent-to-own. Now, there's a number of organizations within the social impact space and kind of in the financial markets who are looking to invest in that. They can be DFIs, so government-backed funds, impact VCs, local pension funds, local banks, etc. The funds that we raise are raised at an institutional level. Housing is, as you can imagine, quite expensive. So, we're not talking in hundreds, but potentially in millions and tens of millions ultimately invest into the space. Those funds are then contributed or put into the Empowa ecosystem or into our platform called Empowa Pay. We take those funds and provide a loan to the local service providers, the local developer. And in fact, our loan is a B2B loan. So we have the contract with the local partner. In the case of Mozambique, it was Casuel. Casuel is responsible for that loan, but they provide the funding to the client to be able to go on a rent-to-own. So they will allow the tenant to move in, allow them to start the rent-to-own contract, using our funds to cover them in the meantime, and the client will pay back the loan over the agreed period of time. That relationship of our funds going to the service provider and the service provider extending the loan to the client is all recorded in a piece of technology that we built called Empowa Pay. So we have a complete line of sight of how the funds have flowed, how the client's repayments are tracking, and that data is also recorded on chain, obviously in an anonymized way, but that gives our funders the confidence that, hey, these funds have been deployed correctly, that they are getting repaid. And sadly, when many kind of investments across the African continent don't have that level of transparency, which does give them the opportunity for corruption and nefarious acts, and that is why many of them fail. So we use the blockchain really for that level of transparency. The client then makes their repayments, which come back to us as a service provider and allow us to service the loan with the accredited investor. Now, I'm sure many on today's session are going to want to know where the community comes in and why, what is this collateral component? Well, it's important to realize that for a long time, when investors have financed affordable housing, they don't necessarily see the home itself as being sufficient collateral. Now, if you're listening in on today's conversation, maybe you live in a place like New York or London or Amsterdam, that almost seems crazy because everyone knows that the houses or the apartment is perfectly good collateral. In the event that you default, we can take that asset back, we can sell it on the open market, and we can recoup our funds. Sadly, in many emerging markets, it's not that straightforward. There can be delays in the legal process. It can be more challenging, for example, to sell a home. It cannot be sold as quickly. The assets aren't as liquid. For all the reasons I mentioned, there's no mortgage market. So that risk is what drives up the cost of capital, which is what makes the whole process too expensive. So what we as Empowa do is we use our EMP token to collateralize a portion of the loan, say 5 to 15%. What that does is it provides a buffer. So in the event of a default or a larger than expected fluctuation in the currency, we can cover that with that EMP collateral. It's not there to collateralize the full loan. We still have the house as the ultimate asset, but it gives us that breathing space to be able to, find a new tenant, sell the asset if required, go through the legal process if need be. Now, what we want in an ideal situation is that the local developer purchases that collateral on the open market. So there's an agreed amount of EMP they need to lock up into a smart contract. They go onto one of the DEXs, they purchase it, and they lock it into the smart contract. But what we realize as well is that not every developer is going to be able to lock up all of the collateral requirement needed. So in that case, the developer is able to make an application to our broader community to say, hi, I'm short of 50% of the collateral requirement. Let's just say, for argument's sake, $100,000 worth of EMP. I'd like to rent or borrow that from you as a community. And in return, I will provide you a portion of the monthly payments each month as a rent for borrowing the tokens. That application is made to the community. The community will then buy an NFT in our EMP token. So for argument's sake, buy an NFT for 400 EMP, which allows us to secure that 400 EMP into the smart contract. And then at the end of the agreed period, they will return the NFT, burn it, and receive their 400 EMP plus whatever's the agreed markup back. In that way, the community is enabling the affordable housing project to go ahead. If there was no support from the community, the collateral requirement wouldn't be met, the funding couldn't be secured at the favorable rate, and the whole project would be too expensive for the end client to enter into the rent-to-own contract. Now, just to give you a sense of how this process is effective, in Mozambique, the average cost of a home loan prior to our offering was 25%. We were able to place home loans at 10% by combining all the different elements that I've mentioned: the transparency around the data, the ability to have an additional level of collateral, as well as some cost savings around moving money in and out of the country, again, using blockchain. So the savings can be very significant. The reduction of risk can be meaningful. And as you all know, when you reduce the risk, you reduce the cost of capital, and you make the home loans more affordable, or the rent-to-own contracts more affordable.
That was a really, really great summarization here. You've touched on the Empowa token, and you touched on the Empowa Pay platform. I'm just going to scroll back up here, and I just want to quickly kind of rehash this just to make sure that I fully understand this as well, right? So you mentioned the institutional investors that basically come in as a part of that first step there, and they're able to use the Empowa Pay platform, and in a transparent way, you guys are able to provide their initial investments to some of the building providers on the ground in some of the developing countries you guys are working in, i.e. Mozambique or even Kenya. From there, the community can pitch in to kind of add to the collateral buffer in the event that there's some sort of liquidation or some sort of transition period where there's no actual renter in the property. But then in addition to that, you also mentioned that the service provider on the ground looking to get business in terms of rent to own could also even reach back out and say, hey, I would like to set up a loan with the Empowa community in order to secure even more funds in order to have that collateral factor being met. And then in the future, I can repay that loan back with a little bit of interest for anybody who's willing to pitch in and satisfy that initial collateral request. And then from a tenant's perspective, once they've moved in and they've begun making their payments month to month, they're essentially paying back that initial loan that was given out by the accredited investors in step number one. Was that a decent recap there?
Yeah, brilliant. I think you're about ready to join the team.
Yeah, that was, I mean, I think you did an awesome job explaining, which is why I'm able to kind of rehash it. But again, this was a really sort of difficult process for me to wrap my head around. And now that you've kind of broken it down, it seems to make a lot more sense. And I love how you mentioned, the transparency and the trustlessness when it comes to the payments, right? From the accredited investors all the way to the boots on the ground, to the developers on the ground, utilizing the Cardano blockchain. So that's where the blockchain aspect comes with this is, again, as you mentioned, in some of these countries, it's extremely difficult to kind of keep, number one, the flow of the payments, but then there can always be corruption in the way where blockchain helps to make everything visible and make sure that what is actually being said is being done. So now that we better understand that, can we maybe jump into, for anybody who wants to join the Empowa community, obviously, a lot of us here aren't accredited investors, and I'm sure you guys have a much tighter pipeline for that, but how can they go ahead and join the community right now? And are there collateral requests that are currently outstanding that they can contribute to now in order to potentially earn some Empowa in the future when those collateral requests are closed?
Absolutely. So, as I said at the start of the conversation, this is very well timed because as of this morning, we launched our first set of collateral NFTs. So we're looking to collateralize the 35 homes we delivered in Mozambique, as well as the first 2 homes that we're doing in Kenya, which is part of a proof of concept pilot. Our launch in Kenya is starting with these just 2 homes, which are really, I suppose, proof of concept pilot show homes, but are the precursor to a larger project that will be around 100 homes. And as part of closing the due diligence round with the funders for that, we've needed to be able to demonstrate this collateral component that I mentioned. So the first NFTs will be launched in May, where individuals will be able to purchase those NFTs, lock up their EMP, and support the project going ahead. What is important to know is that as part of that launch in April, we're taking live a marketplace that we've built, which allows you to trade NFTs in our own token. And that is a piece of technology that we are open sourcing, so the Cardano ecosystem can also make use of it. We're getting it also audited, the smart contracts audited just for extra peace of mind. And for us, that was important because if you're trading an NFT that is going to provide a return later in our token, we don't want you to have to take on the currency risk of trading it in ADA, because who knows what the ADA to EMP ratio will be later on, versus if you can buy and sell in one in one token, then that obviously removes that risk. We hope that there will be other projects who see value in that approach, in that piece of tech. So that's why we've open sourced it. But that will go live in April. Then the NFTs will go live for sale in May. And I suppose where these NFTs are somewhat different is, there's real world utility. So of course, there's a big movement toward real world assets. This is an NFT that has a direct link to a real world asset, and NFTs will be sold for 370 EMP and will be repurchased for 407 after a year. So for anyone who's looking to get involved, obviously always good to follow us on Telegram, Discord, and on X or Twitter to keep up to date with when those go live. And then when they do go live, you'll be able to purchase those collateral NFTs in our token, only in our token, not in ADA, and therefore support the project and the mission that we're trying to achieve. And at the same time, lock in some future return or reward for supporting the project going ahead.
Congrats, first and foremost, on that launch. Breaking into new territory, I'm sure it's never easy, but it sounds like you guys have at least some initial interest, right? And that thing that you mentioned earlier is like, this is a proof of concept to see, okay, hey, is this market ready for this? And I'm sure as things progress, if there is demand, if there is adoption, that we could see even more collateral NFTs or collateral initiatives coming out for the community to participate and earn some passive EMP in the process. I do have to take a second here and ask, when it comes to just risk, right? I want to be transparent with the community here as well. There's the lockup period. So there's the purchase of the EMP collateral NFT, and then you earn that 10% APR. And as you mentioned, there's a lockup for one period. Could there be a scenario where the maybe market doesn't take off, and now someone's purchasing NFT, how guaranteeable is that 10% APR?
Yeah. So first of all, any collateral provided is never linked to any one property or any one individual. So that is also part of the reason why we've had to do this expansion beyond just Mozambique, because as soon as we start to diversify our risk across multiple developers, multiple projects, multiple countries, that de-risks the offering as a whole. So in the event that there is a default by any one tenant who doesn't meet their requirement, first of all, that's not to say just missing 1 month means that we necessarily need to dip into the collateral. We obviously make provisions for that. It would be foolish to think that every home is going to have every tenant in it, regardless, with no issue. So there is buffer built into the agreement with the local service provider and with the funder. It is for our unexpected levels of default or non-performance. Again, if that happened on just an individual tenant's level, that's not an issue. But obviously, if it happens across multiple tenants, maybe across multiple projects, then of course that does start to create an issue. As Empowa, we will always be looking to raise EMP to collateralize all our properties under management. So a good way to think about this is a little bit around when maybe a government looks to issue a bond and to raise funding. If everything is going according to plan, let's assume I'm talking to you in 2 years' time and we've delivered 1 million homes that have all been run perfectly according to plan without one single default. When we look to raise collateral at that moment, the reward that we will provide will be much lower. You could imagine we might sell them for 400 and give you 401, right? Because it's such a proven track record, demonstrable, of success, and the level of default is so low. If, by contrast, we had a 50% level of default and we had to tap into that collateral often, the next application to the community would have to provide a much higher reward in order to justify you locking up your EMP. Maybe we would ask for 400 and have to return 1,200 to compensate for the perception of risk. So The collateral component is basically a constant market where we are saying, this is how we've been performing, and there will be reports and on-chain data, etc., to demonstrate if there's been any default. Have we ever had to tap into that collateral? If we have, we will have to increase our next collateral request to fill in that shortfall and have to provide a bigger return to compensate people for that risk. So to answer your question, what is the risk? Well, I suppose the risk is that we have a major level of default across both Mozambique and Kenya, that we have to dip into that collateral, and that the next time we look to raise collateral to fill up that pot, no matter what return we offer, we're unable to top it up, and therefore, return the collateral as expected. Whilst, of course, that's not impossible, it's highly, highly unlikely at this early stage, given the number of homes that we have in question, the relationships we have there. So we think that that's very unlikely. But of course, we've all seen crazy things happen in crypto. So I don't want to pretend like there's no risk. As I've said, if we do need to tap into this EMP, what it means is that the next time we look to raise, we'll have to raise to fill up the pot and provide a high enough return to justify people taking that risk. The other thing that's worth mentioning, just before I close off on this point, is we also have that marketplace falls under the umbrella of Empowa Trade, which is a platform that we've built to allow you to trade these NFTs, as I mentioned, in our own token. So what it also means is you're not duty bound to have to hold this NFT to its 1 year maturity. If you, for whatever reason, feel uncertain or you need those funds back for whatever reason, you're able to either trade them on our marketplace and maybe you'll take a small discount but get out of the instrument. Or alternatively, of course, you can go sell it on any of the NFT marketplaces, obviously not in our token, but likely in ADA, and be able to exit the position. And that also should give peace of mind that if you, as an example, aren't feeling confident or just need the funds for whatever reason, or you want the EMP now because it's gone up in price or there's something else to do with it, whatever, you'll be able to obviously trade it accordingly. And whoever holds the NFT at the maturity date can take that back, burn it, and get the outstanding EMP.
That was a really good summarization of the sort of risk model, right?
Yeah.
As you mentioned, if things are looking good, you guys had that proven track record, we could probably expect for the lockup rewards to kind of diminish, right? Because again, of that proven track record. But as you guys are taking on more risk, there's also more rewards for people locking up their collateral. And then I also love the fact that you mentioned that the NFTs act like a bond almost, right? You don't necessarily have to hold it if you want to sell it on your marketplace or on the sort of broader Cardano marketplaces. You can go ahead and do that and allow for somebody else to pay you for that upfront, but then they'll be able to cash in on the benefits of that collateral that was initially supplied at the very beginning. One thing I do want to just quickly pose is, can you clarify? So earlier I showed this flow here.
Sure.
And there was the collateral here that was sort of like the buffer in the event that there was a liquidation. The collateral that you were just mentioning, sort of like as the pot in case that there is risk, is that different from this collateral that we're seeing set here?
No, so this remains the same. So I think the important thing to remember is, ultimately, this effectively becomes an over collateralized loan to the developer, because assuming that the house remains at the same value or goes up in value, you now have the house and the EMP acting jointly as collateral. Again, even in the event where we had to draw down some of that EMP potentially, to make up the shortfall, it might be the case that can then be caught up because now we've got a new tenant who's moved in or we've sold the home. What really blew my mind, I was in Nairobi a few weeks back, meeting there with some of the funders and getting some insights on the market from EY, who's a partner of ours now, Ernest Young. And in the first year of affordable housing hitting the market in Kenya, on average, it had a capital appreciation of 30%, which is crazy. It just shows how little supply there is and how much demand there is. So again, if we imagine that a a year into the contract, for whatever reason, the developer has defaulted and we've needed to take over or take ownership of those apartments, we could sell them hypothetically in the more traditional way. That apartment, in the case of at least Nairobi, would have gone up in value. So we would be able to recoup the money invested, plus there'd be some buffer if the market continues to appreciate. And we always have the collateral as that added level of protection. Where the collateral is important is it's highly liquid. So all of us who trade tokens on a daily basis know I can go to a DEX, I can place an order, and it can get executed, and the funds can be in my account immediately. That is not necessarily the case with an affordable house in Africa. And so as a result, what do you do if it takes 3 months, 6 months, 8 months, 9 months for the system to work through the courts or for the house to be sold? How do you ensure that the accredited investors put their funds in aren't sitting there out of pocket for that duration? Well, that's where the EMP can serve as that buffer, can help to make them whole, which lets them sleep easily at night and reduces the returns that they expect, while on the ground, the process can be sorted out. And again, let's just say as an example, the home is liquidated. We now have those funds to either exchange back for the EMP or to make the deal whole or to purchase on the open market, whatever is required. So it's not, I think this is sometimes a point where people get confused. The collateral is not there to cover the entire loan. I think for many of us who are in the DeFi space, we get this concept of, I'm going to park a bunch of my token as collateral. I'm going to take out a loan. And if that collateral requirement drops and then we get liquidated and all that stuff, this is real world. These are real world assets. If you go to the article we posted today, you can see a photo of the blocking of the development in Kenya. This is a real building. It has real market value. People live in it, etc. So that is where it's a bit different, but we do need to make sure that in the short term, there's a way to bridge that gap in the event of an unexpected performance on the loan, so that perceived risk is lowered, therefore the cost of capital is lowered.
Thank you for the follow-up there. Again, I think these are some of the questions that the community probably has.
Of course.
It's not as you mentioned, a full crypto project. You guys are definitely doing something outside the norm. And I personally want to make sure that I fully understand. But it's a really interesting concept here. And I would love to see this being implemented across multiple countries and even additional continents. So maybe I just take a quick break here and just kind of shift gears. Could we see Empowa, focusing on other continents, et cetera? I know that, you guys have focused very heavily so far in Africa, and even Cardano and the Cardano Foundation, had a goal of helping out that particular continent. But do you see Empowa branching out into other continents as well?
Yeah, so us starting in Africa was really a product of the fact that almost everyone in the team has some tie to the continent, and therefore really kind of felt a need to solve what is a very clear and very obvious challenge, and as a result, business opportunity that it presents. So that's why we started in Africa. What we have found to be interesting is how many people have reached out to us to explore using something similar in other markets, even in very developed markets. I mean, probably a few times a month, there will be somebody in the States, for example, who says, cost of housing across North America and in America is unaffordable. Could we implement something similar? We always say that strategy is the art of sacrifice, or the art of knowing when to say no. So whilst right now we're really keeping our focus, I would be remiss to say that we're only ever going to do African-based countries. There's some interesting opportunities in Eastern Europe, slightly different, but a similar model could be applied. But I think for now, we really need to demonstrate that this works kind of where we've done most of our research, and therefore, rather than get distracted by shiny and new and interesting things that are kind of what we expected, but not 100%, we're just going to stick to, where we researched to write our white paper, where we've researched since, and also where we have a lot of our own existing relationships. There's more than enough opportunity on the continent to keep us all very busy for the foreseeable future.
Solid response there, and I'm excited to hear that. I did want to quickly, just for the community who isn't aware, highlight the fact that you guys did release a Q1 update just a couple of hours ago, actually,
Yep.
breaking down, as you mentioned, the progress that Empowa has made, but then more notably, the actual developments here in Kenya. So towards the very bottom, and it should be popping up here in just a second, we're going to actually get to see the development, right? Which I believe is what you were highlighting earlier, which is what you guys are aiming to get tenants into as a proof of concept in Kenya. So I just urge the community, if they're interested in finding out more about what Empowa has been doing over the past couple of months, jump in, check out this Q1 report here, breaking down their recent progress, but then also highlighting their recent endeavor into the country of Kenya. So, Greg, we've been going for about 35 minutes now. I do want to give you an opportunity to maybe just kind of highlight anything that you think that is of importance that we may not have gotten to touch that you want to share with the community here.
Yeah, absolutely. So, look, first of all, thank you, everyone, for your time. And I know we're not the most straightforward project, so I really appreciate these opportunities to hopefully walk you through some of the thinking. I think, Empowa is somewhat unique in that we really are sitting as a project that demonstrates the value of blockchain in the real world. Time and time again, when I go to dinner parties and people ask what I do, and it eventually comes out that I'm involved in blockchain, the challenge I often get is, it's all about meme coins and dogs with hats and everything. And I, always take the time to try and explain to them, look, this is a piece of technology that is fundamentally changing the way we provide affordable housing, which, there's nothing more real world than housing, and there's no bigger asset for most people than their home. So, I think it's an interesting project, hopefully for many people to learn about. It's not, the 100x, 1000x overnight and then crash down to 100,000x the next day. We understand that, and sometimes that's maybe not as sexy as some other corners of the crypto space, but hopefully, this real world application and kind of the sustained opportunity that presents is something that will interest most of you. And really, we as a team are always eager to kind of try and unpack our thinking, try and explain some more details, hopefully educate a bit more about the project. So join our Telegram, please, and join our Discord, ask your questions, and we'll do our best to give thoughtful responses that hopefully clarify what we're trying to do.
I tend to think that Cardano, just due to the nature in which it's developed and the audience that it's attract, brings in investors that, yes, some may be exposed to meme coins, but I think the majority of us here are here for a bigger impact and for real world impact and a real world use case, which you guys, I think, have a proven track record of not just being committed to, but actually making it work, right? I tend to compare you guys with something like World Mobile, and you and I chatted yesterday about your partnership with World Mobile, right? For them aiming to connect the unconnected, which is another issue plaguing some of these far less known countries and far less developed countries, right? So I tend to think that, yes, you guys may not necessarily have the 100x pump, but you guys will be one of the projects that will be here in 2030, 2040, 2050. And that's when I think a lot of the community will be like, man, I wish I would have taken a look at some of these real world use cases as opposed to meme coins, et cetera. Again, everybody's got their own sort of free will here in this space, but I tend to be on the less risky side. And, meme coins are great maybe for bringing people into the space, but I think once they've been around, they should definitely do their due diligence and begin to look at projects with a real world impact, for example, like Empowa. So Greg, head of operations here, I couldn't thank you enough. A wonderful speaker, great job of breaking down the ecosystem, and also great job of highlighting Kenya and your upcoming Collateral NFT launch. I'll go ahead and leave the links to that down below for anybody who's hearing about this and just wants to become a part of the Empowa community. As he's mentioned, I'll go ahead and leave the link to their official website down there as well, their Discord, Telegram, and Twitter. Make sure to go ahead and follow them in order to stay updated. But I think that'll do it here for today's video. Again, thank you so much for your time. For the the viewers watching, if you guys did enjoy today's video, I would appreciate you if you could smash that thumbs up. It really does help to get this spread out here, not just within the Cardano community, but just to anybody who's looking to get into blockchain and crypto, showing them the real world use cases and real world utility that blockchain and specifically Cardano can actually have. If you want more content like this, highlighting all the builders here, consider subscribing to Dapp Central. And last but not least, if you have any questions for me or Greg surrounding Empowa, their upcoming NFT sale, then please make sure to go ahead and leave those down below. That said, and as always, we'll see you all in the next video.